Hey everybody, welcome back. So today I'm going to be talking about three blue chip companies that I am currently buying or selling put credit spreads. Okay, so these are just solid companies with just a really rich history, good earnings, and in the last couple of months they've just been down a lot due to various reasons. And so today we're going to talk about three blue chip companies that I do believe is going to have some kind of rebound eventually, and therefore I am trying to maximize my gain while limiting my risk using put credit spreads. Okay, so before I begin, just make sure you smash that like button if I do offer any kind of value, if I help you make some money, or if you have any questions or any ideas you want to talk about. Feel free to leave a comment and subscribe. I would really appreciate that. So without further ado, okay, the first stock ticker that I am selling put credit spreads. And real quick, just if you don't know what put credit spreads are, I've made a video covering this a lot more in detail, but it's basically where you buy a put and you sell a put at a higher strike price, and therefore you collect a credit. Okay, and that credit is realized, so it becomes yours if the stock doesn't move down by a certain percentage. I'm going to show you exactly how that works, what it looks like on Robinhood, and I'll show you some of the technical analysis behind it. Okay, I'm probably not going to do as much analysis today, but nonetheless, I'll show you some for that as well. Okay, so the first stock ticker is ATVI, Activision Blizzard. Some of you guys who are huge gamers, World of Warcraft, I'm not a huge gamer myself, but I do know Activision Blizzard has been around since I was a very young little boy, and it's a company. If you look at the history, it's been just solid earnings ever since the beginning. Okay, so it's been around for quite some time, ever since 1993, and so year to date is actually down 10%. Okay, so there were a little bit of some issues with some allegations of sexual misconduct, and that's something that I would never approve of, and that's something I really do not condone. But nonetheless, it happens, right? And I do think, though, the stock is in for a rebound, and so let's take a look at some of the fundamentals. Taking a look at the RSI, it's at 62, so which is it's okay. Okay, and then the PE, price to earnings, is 24.21. That is really low for a blue chip company like this. Forward PE of 18.35. Price to sales 6.98. Earnings per share this year is 44%, so that's pretty good. Let's take a quick look at the Bollinger Bands and some of the other fundamentals. So we'll take a look at ATVI, Activision Blizzard. Okay, so it does look like, let's see the charts. Okay, yeah, so it looks like right now it is trading below the Bollinger Band. So I think it's a perfectly fine time to go ahead and sell this credit spread. So the way it'll look like on Robinhood is usually I go out for, probably about 2 months, sometimes 1 month, sometimes even a week. But usually I like to give it some time, especially if I don't know how the stock is going to move in the upcoming weeks. You can also trade long term, so meaning that if you want to go into 2022, that's fine. The only issue that you want to pay attention to is usually whenever you sell put credit spreads, you have to put up some kind of collateral. Okay, so I'll show you that. And that wouldn't be a problem if you traded on, if you traded on Interactive Brokers, right? And that's the reason why I do trade on Interactive Brokers, is because generally speaking, collateral takes away your opportunity costs. Meaning that if you trade a put credit spread and your money is on hold, then you can't use that to buy something else, right? But whereas if you trading on Interactive Brokers, you actually have access to the funds that you are invested in, okay, and you can access that at a very low margin rate. And so that's one of the things that a lot of rich people do, is they just literally just borrow money, or borrow money against their investments like real estate or equities. So that's one thing that I will probably make another video on, to talk a little more about how the rich invest. But anyways, in the meantime, I'll share what this looks like. We're going to open a credit spread expiring in December 17th. I do think that Activision Blizzard is going to be up by then. And just because I foresee earnings coming up, and I do know that around this time, the holidays, is when these kind of companies, the stocks generally do pretty well. So I'm going to buy a put first. Okay, so probably at the $75 mark. Okay, so usually you want to go in the money, which is basically under the stock share price. Okay, so it just means that the stock can actually move down and you would still be able to realize your profit. Okay, if you go up, then the stock would have to move up, which is fine too, but I think it generally is a little more riskier. Okay, so I'm probably going to do it at 162, and I'm going to sell my put for my credit at 77.5. Okay, so this basically means that if on December 17th, 2021, if ATVI stock doesn't move below 4.42%, then I realize a gain of $75. Okay, but if it does go below 175, then I am down I'm starting to lose money. Okay, so it just depends on your risk tolerance and how much you are hoping to collect. I do want to show you though how much collateral generally you would hold up. So let's say I do open up this trade. I have a credit of $75. The collateral, which is the money that would be on hold that I cannot use unless I'm using interactive brokers, is $250. Okay, so just wanted to show you that so you know what I meant by collateral. Okay, so you get, and the great thing about these kind of put credit spreads and Robinhood having such a clean interface is you can play around with different options. If you're a little more bullish on ATVI and you do think it's going to go up even more, you can buy and sell a put closer to the actual share price. Okay, let me show you what that looks like. So there you go. So now the stock would really just have to move up 1% and you're up $130, right? If it moves down, or if it moves up only a little bit, then you start to lose money. Okay, so it all depends on what your thesis is, how you think the stock is going to move. But generally, I think put credit spreads are less risky than actually just buying outright stock, because number one, you can only buy so much stock if you're just using cash to purchase stock shares. But number two, I think your risk is really limited in that if the stock for some reason drops 10%, 20%, the max loss is only $120. Okay, so this is one of the stocks that I am going to be selling put credit spreads on, just to try and realize a profit. And I do think this is one of the easiest, or at least the simplest, and perhaps arguably the less risk adverse way to trade companies that you're bullish on. Okay, the next stock ticker that I'm going to be talking about is, as we all know, Facebook stock. Okay, so Facebook is down once again. Oh man, the last couple months has been trading just really volatile. Right now it's really down, all the way down 315. So this is like one of the best times to, I think, go in on Facebook stock. I do think Facebook does have a really good long-term outlook. I know there's been a lot of just things going on within the company. That is the reason why it's going down. RSI is 34.76, but look at this P ratio, price earnings 23.42 on with such a huge blue chip company stock. 4P 19.76. Let's take a look at the Bollinger Bands. Okay, so Bollinger Bands is probably, I'm guessing, most likely well below. Look at that. So right now is a good time to get in. We're going to take a look at what options we got. So let's take a look at Facebook. I think I do have one spread open already, but just taking a look. Yep, I do. So I'm probably going to go out a little further just because I don't know how long Facebook is going to take to recover. And I'm fine with actually keeping the collateral on it just because I'm using interactive brokers. So I'm probably going to be taking a look at June 17th, 2022. I'm going to buy a put at probably just close to the share price, right? Buy the put at 305, sell 310. Look at that. So if Facebook at an expiration date of June 17, 2022 doesn't go down by more than 2%, I would have made $235. Now the collateral on it will probably be around $500, but that's fine, right? And the thing to know is you can also sell out of your credit spread anytime. So you can just buy back the credit spread at, if your stock is up by then you can sell it at a profit. If it's down, you would of course have some loss, but you can get out of the trade anytime if you need. For me, I don't really care about it just because I have access to those funds if I'm trading on Interactive Brokers. Okay, so the last stock ticker that I'll be talking about today is the infamous Alibaba Stock. Okay, Alibaba has been really down this year, but there was a little bounce in October, right? It was down to 139 and now it's up to 170. Charlie Munger, Warren Buffett's famous partner, has been buying up the stock. Let's take a quick look at the fundamentals. Okay, Alibaba. Okay, now there is a lot more risk to Alibaba just because of the regulations surrounding China. But right now, look at this, 4P at 2.45. That is insanely low, right? P ratio 20.24, RSI at 55, so that's not bad. Let's take a look. Like, Alibaba is just killing it. And there's so much in the pipeline for Alibaba right now. If it weren't for all these regulations surrounding China, Alibaba would definitely be a stock that is up in the 300, 400 range. Okay, so taking a look at the Bollinger charts, we do see that it is underneath the Bollinger Band, which just tells us that it's probably a pretty good time to buy. Let's take a look at what options we got for Alibaba. Okay, so Alibaba trade options. I do have a credit spread open already. I'm probably going to go out again a little further out just because I don't know how long all these regulations is going to continue to beat up on the market. So I would probably be looking at, again, trades closer to the share price. Okay, so let's see if we buy put at 165, sell put at 170. Look at that. So Alibaba really just has to go up by 0.4% at June 17th, 2022, and we will start to realize a profit. If it goes up by just 1.79%, we realize our max profit. We can get out of the trade and sell it, right? And so I think this is really a no-brainer. Rest, you're going to have collateral for $500 on it. But if it just goes up a little bit, you earn quite a bit of money. Now, if it goes down, you probably have to wait a little more to see if the stock eventually recovers. But to me, this is a no-brainer trade just because the stock only has to move just so little for you to realize such a huge profit. And remember, you can open up quite a few of these. You're not limited to just one. Let's take a look at if my buy I put at 170 and sell at 175. Now my profit is up to 290 and the stock just has to go up 5%. We saw Alibaba go up by 20%, like almost 20% in the last month. So that is definitely something that's very, very possible. And right there, right, $300, almost $209, $290 on a quick credit spread trade if the stock moves up sometime before June 17, 2022. Okay, these are just a couple blue chip companies that I've been taking a look that I think do have a long-term bullish outlook. And I think a really easy way to trade and make profit is just using credit spreads instead of just outright buying the stock. If you like my content, again, make sure to like, subscribe. It will really help out the channel. If you have any questions, feel free to leave a comment. Until next time, guys, I will see you then.